Imagine, like, discovering that the entire global economy is essentially just a massive game of musical chairs.
Okay, that's a terrifying visual.
Right, you are circling the room, waiting for the music to stop, but instead of just risking losing your seat this round,
Yeah.
you are suddenly told that in exactly 5 years, every single chair on Earth will be bolted to the floor permanently.
Wow, permanent.
Yeah, permanently. If you aren't sitting down by then, you will literally never sit down again.
Yeah.
So, welcome to the deep dive. Today, we are looking at a hyper-specific, terrifyingly concrete timeline for the future of human labor and class structure.
Yeah, we are examining this really stark, very brief piece of writing, simply titled Eingefügter Text, which is just German for inserted text. And it reads like a manifesto-style snapshot from someone who has looked at the current trajectory of artificial intelligence and basically hit the panic button.
Hit it hard, yeah.
Exactly. It is not one of those glossy, optimistic tech predictions. It is honestly a foreclosure notice for the working class.
Okay, let's unpack this because our mission today is to figure out the exact mechanics of this author's panic. The text lays out a concrete 5-year countdown, a specific existential threat to the value of human labor, and one incredibly narrow, highly difficult escape route.
Which is a lot to take in.
It is. And we aren't here to endorse this vision or tell you this is definitively going to happen. But the economic gauntlet this author throws down, it forces us to completely reevaluate the trajectory of technology.
It really does.
So to understand how we get to that bolted down chair, we have to start with the specific timeline this author presents and the deep sense of disillusionment driving it.
Right, because the author actually opens by stating point blank that they are, quote, disillusioned by the growth of AI.
Disillusioned.
Yeah, and that word choice carries a lot of weight. You know, disillusionment implies a broken promise.
Right, because the early narrative around artificial intelligence was all about democratization.
Right, exactly. That it would be the great equalizer, giving everyone a genius-level assistant. But the author's observation of the actual landscape has led them to this staggering conclusion that we're in a 5-year window before a permanent underclass is solidified.
That phrase, permanent underclass,
Oh.
it just completely shifts the stakes here.
It really does.
Because, historically, class structures have been brutal, sure, but rarely permanent in a purely structural technological sense. Look at the Industrial Revolution as a contrast. It absolutely devastated agricultural and artisanal labor.
Oh, absolutely. Created terrible conditions for factory workers.
Right. But there was still a path to economic mobility. Workers could organize, labor unions formed, education spread. The fundamental reality was that the machines still required a human hand to operate them. Labor still held intrinsic value. But the author is arguing this specific technological leap is fundamentally different.
What's fascinating here is how the author suggests that once AI crosses a certain capability threshold, it doesn't just augment the human hand, it removes it entirely.
It just cuts us out of the loop.
Exactly. If your labor has zero economic value, because an autonomous system can execute faster, cheaper, and, continuously, traditional avenues for upward mobility just evaporate.
Because working harder or getting a promotion relies on the premise that your labor is actually a necessary input for production.
Right. And once it is not, you are structurally trapped. The doors to economic mobility lock from the inside.
But I want to scrutinize that 5-year timeline for a second. Why exactly 5 years? That implies a really sudden, irreversible cliff rather than a gradual economic shift. Are we waiting on a specific software breakthrough, or is this about corporate adoption?
Well, the specificity of that 5-year window is actually what makes the argument so grounded in reality. It is not about waiting for some magical software algorithm to be coded. It is about the physical limits of infrastructure.
Oh, interesting.
Yeah, look at the massive capital expenditure happening globally right now. It takes roughly 3 to 5 years to permit, construct, and power a gigawatt-scale data center.
So it's about the hardware.
Exactly. It takes years to secure land rights, negotiate with utility companies for dedicated energy grids, build industrial liquid cooling systems, and fabricate the next generation of specialized silicon chips.
So we aren't waiting on the code to be perfected. We are waiting on the concrete to dry.
We are waiting for the power grid to turn on. The billions of dollars currently being poured into physical infrastructure, the fiber optics, the nuclear reactors being restarted to power servers.
Wait, they're restarting nuclear reactors?
Yeah. The chip fabrication plants, all of it will coalesce into functional, world-eating networks within that exact time frame. When those massive physical bottlenecks are cleared and those projects come online simultaneously, the paradigm shifts entirely. The author argues that this is the moment the deadbolt turns.
Wow. Okay. So if that door is locking in 5 years,
Yeah.
the obvious question for anyone listening to this is, how do you get inside the room before it shuts?
Right. How do you survive?
Yeah. And the text provides a singular, incredibly specific answer. The author states the only chance to escape this fate is by owning compute and control of the infrastructure that makes AI and robotics work.
And notice what is absent from that prescription. The text doesn't say learn to code or start an AI software company or, learn to write better prompts.
None of the usual advice.
No, it points exclusively to compute and infrastructure.
Here's where it gets really interesting, because we're essentially moving out of the software era and reverting back to a heavy industry era. In the software boom of the last 20 years, everyone was competing to design a better airplane. It was all about the code, the user interface, the intellectual property.
Yeah.
What this author is saying is that the sky itself has just been bought. It doesn't matter how brilliant your airplane design is if you can't afford access to the runway. The physical servers and the data centers are the runway.
If we connect this to the bigger picture, compute is the new real estate. For decades, the prevailing logic was that software was inherently democratic. A teenager with a cheap laptop and a Wi-Fi connection could theoretically write a billion-dollar application from their basement.
Right, the whole Silicon Valley garage myth.
Exactly. Intellectual property was the ultimate economic moat. Today, that moat is being replaced by a massive, impenetrable capital moat.
Just sheer money.
Yes. Compute refers to the sheer processing power required to train and run these massive models. We are shifting from a world where ideas won the market to a world where sheer physical scale wins the market.
But I have to push back on the viability of this escape route. I mean, how does an average person or even a moderately successful business own compute?
Well, that's the problem.
Right. High-end GPUs cost tens of thousands of dollars a piece. You need tens of thousands of them clustered together to even be a minor player in this space. You can't just bootstrap a gigawatt server farm in your garage.
No, you definitely cannot.
Doesn't the author's logic essentially mean this escape hatch is strictly reserved for a tiny fraction of society that already has unfathomable amounts of capital?
The math points directly to that hard ceiling, yeah. The author's premise outlines a hyper-centralization of the means of production. If you do not possess the billions required to build the infrastructure or the capital to acquire significant equity in the megacorporations that do, you are locked out of the ownership class.
So you are basically relegated to being a permanent renter.
Exactly. You pay rent to use the intelligence required to do your job.
And as the AI improves, it does a larger percentage of your job, which exerts downward pressure on your wages, making it harder to afford the rent for the compute.
Which creates a vicious, accelerating cycle. The owners of the compute rent it out, extract capital from the users, and use that massive influx of capital to build even more data centers, further cementing their monopoly on the infrastructure.
It's like a snowball effect.
Exactly. The gap between the infrastructure owners and the infrastructure renters becomes unbridgeable.
And this centralization creates an immediate, devastating bottleneck for the next generation. The author addresses this directly, stating it is, quote, hard to see new generations having much opportunities unless they're highly specialized.
Right.
So what does this all mean for you or your kids? Because this completely upends the foundational advice we have given young people for decades.
Absolutely.
We've always been told to get a broad education, learn a little bit of everything, and be an adaptable generalist. But under the logic of this text, a generalist is just a massive target for automation. It's like being a Swiss Army knife in a world that only wants to buy a scalpel.
That's a great way to put it. The Swiss Army knife is valuable precisely because it is good enough at multiple tasks, but a foundational AI model that has ingested the entirety of human data is not just good enough at general tasks, it is exceptional at them.
It's better than we are.
Often, yes.
Right.
Writing standard marketing copy, conducting basic legal discovery, doing entry-level coding, or performing routine financial audits, these are the core functions of a generalist knowledge worker.
And they're all at risk.
Because they rely on predictable patterns, they are the easiest processes to automate. The author is forecasting the complete death of general entry-level labor.
Wow. And the text suggests survival requires being highly specialized. That implies a level of esoteric, nuanced expertise that AI cannot currently synthesize. We are talking about high-stakes human-to-human negotiation, highly complex physical engineering, or cutting-edge strategic theory.
Yes, really high-level stuff.
But here is the massive structural flaw in this progression. How does a young person become a scalpel if they never get the chance to practice? You don't just graduate from university as a master-level negotiator or senior architect.
You have identified the exact structural crisis facing the modern workforce pipeline.
Ah,
How do you cultivate highly specialized experts if you eradicate the entry-level roles?
right.
The entire concept of an apprenticeship is at risk. Historically, the path to becoming a senior partner at a law firm involves spending 4 to 5 years as a junior associate, doing the tedious, low-level document review.
The grunt work.
Yeah, that grueling grunt work is how you actually learn the nuances of the law.
The entry-level job isn't just about economic output for the company. It is a subsidized educational pipeline. You learn by making mistakes on low-stakes projects under the direct supervision of a veteran.
Precisely.
If we sever that pipeline at the bottom, because it is drastically cheaper for a firm to use an AI to review those documents in 30 seconds, we starve the entire ecosystem of future experts.
And the author's warning points to a future where the only humans who retain economic value are those who already possess specialized knowledge before that 5-year window closes.
Wait, so if you're still in school?
For anyone entering the workforce after the door locks, the bridge is burned. It forces a complete reimagining of how society imparts skills. If the corporate economy will no longer pay young people to learn on the job, the educational system has to somehow perfectly simulate a decade of high-level, real-world apprenticeship before a person ever hits the labor market.
Which sounds nearly impossible. It's like demanding someone win a gold medal in gymnastics, but you've bulldozed all the local gyms, banned the junior leagues, and removed the training mats. You just have to magically arrive at the Olympics, fully formed and ready to execute flawlessly.
It's an incredibly bleak outlook for the youth. And this squeeze on human utility isn't staying confined to computer screens or knowledge workers.
No.
No, the text moves out of the digital realm and into a much darker physical reality. The author's ultimate fear is realized when they discuss physical AI and automation coming to replace everyone in the human workforce.
Everyone. The consequence of this, according to the text, is that all the value derived from AI will go to shareholders without requiring the cost of labor. The word everyone is doing a lot of heavy lifting here.
It really is.
The author isn't just talking about data entry clerks or copywriters. They are talking about advanced robotics navigating the physical world, farming the food, driving the logistics trucks, building the houses, performing the surgeries.
This raises an important question because this is the maximalist prediction. It envisions the convergence of artificial general intelligence with advanced robotics. It frames the cost of human labor not as a livelihood, but purely as a biological inefficiency that capital has finally found a way to eliminate entirely.
But I have a massive logical pushback here, purely based on the macroeconomic reality of the scenario this text is painting.
Okay, let's hear it.
If physical AI replaces everyone, and human labor has zero cost to corporations, who is buying the products? Think about the basic mechanics of consumer capitalism. Henry Ford's entire model, Fordism, was built on the realization that you have to pay your workers enough wages so they can afford to buy the cars they're building.
Right, the cycle of consumption.
The entire engine of our economy requires a working class that earns enough to consume the goods being produced.
Yeah.
If you eliminate wages entirely, you eliminate the consumer base. This is a massive crisis of overproduction. The system should mathematically collapse on itself.
You are pointing out the fallacy of composition, the economic principle that what is rational and profitable for a single corporation can be disastrous if every corporation does it simultaneously.
Yes, exactly.
From the perspective of a single firm, labor is a cost to be minimized to maximize shareholder value. If company A completely automates its workforce, its profit margins explode. But if every company automates everyone, the macroeconomic system breaks down because aggregate purchasing power drops to zero.
Exactly. It's like a casino where the house has systematically won all the chips, but they've kicked out all the gamblers. The game can't continue.
The text doesn't explicitly resolve this contradiction, but it implies a chilling evolution of capitalism into something closer to neo-feudalism.
Feudalism.
Yeah. You have to analyze the closed loop of capital the author is describing. Let's trace it. The shareholders own the compute. The compute powers the physical AI. The AI extracts the raw resources, builds the physical infrastructure, generates the power, and grows the food.
And the outputs.
The outputs return directly to the shareholders.
Neo-feudalism, meaning the shareholders don't actually care if the consumer market collapses.
If you own the autonomous systems that fulfill every physical need, generate unlimited energy, and defend your assets, you don't necessarily need consumer dollars in the traditional sense. You own the intrinsic value itself.
So money as we know it changes.
Right. Our current system is a circulation economy. Wealth is generated by money moving between hands. The author is describing an asset economy. The infrastructure itself is the wealth.
So you don't need a robust middle class to buy your goods, because you don't need to convert those goods into cash to survive. The physical AI creates a self-sustaining, closed-loop ecosystem for the owners.
Exactly.
And the rest of humanity isn't even exploited for their labor anymore. They're simply rendered irrelevant to the production cycle. They're left entirely outside the walls.
That is the defining characteristic of the permanent underclass the author fears. Throughout history, labor was the primary leverage the working class had.
Even in the worst systems.
Yes. Even in the most oppressive systems, the elite needed the masses to harvest the crops or man the assembly lines. If labor is no longer a necessary input for survival or production, that leverage drops to absolute zero. All the value, as the text states, goes to the shareholders, unencumbered by the friction of paying humans to exist.
Wow. This has been a deeply intense exploration of an incredibly potent piece of writing. We tracked the author's initial disillusionment to a terrifying 5-year infrastructural ticking clock. We looked at the impenetrable capital moats of owning compute buying the runway instead of the airplane.
A very narrow escape route.
We discussed the destruction of the entry-level apprenticeship pipeline and what that means for a generation told to be generalists. And finally, we explored the massive macroeconomic paradox of a zero-labor economy and the potential rise of a neo-feudal closed loop. As you navigate your own career in the news cycle, it forces a critical lens. Are you building the physical infrastructure? Are you that highly specialized scalpel? Or are you a generalist caught in the crosshairs of this 5-year window?
It is a paradigm that demands absolute clarity about your own economic positioning. But building on your point about the crisis of overproduction, I want to leave you with one final, unresolved thought to mull over.
What's that?
If we do reach the state the author predicts, where a permanent underclass has no labor to sell, and a shareholder class owns a closed loop of automated production, does the very concept of money, as we understand it, break down?
How do you mean? Like the actual currency?
Money is essentially a ledger. It is a mutually agreed upon system for tracking human labor, debt, and value. It is a medium of exchange. But if physical labor is entirely free because machines do everything and the masses have no wages to circulate, what exactly are those shareholders accumulating?
That's a wild thought.
$1 billion in a bank account means absolutely nothing if there is no human economy to spend it in and no human labor you need to buy. In that world, perhaps currency ceases to be paper or digital digits. Perhaps the only true currency left, the only thing that actually measures wealth and capability, is watts of energy and raw processing power.
That completely rewrites the entire measure of human worth. The notice we read today isn't just warning us that we might lose our jobs. It's warning us that the entire ledger we've used to measure society, our labor, our wages, our leverage, and even our money, might become obsolete.
Exactly.
It is a heavy thought, but an absolutely necessary one to carry with you as you watch the infrastructure being built around us. Thank you for joining us on this deep dive. Keep questioning the evolving paradigms around you, and we will catch you next time.